Hi there, good afternoon. Welcome to Closing Trades. I am Snehi Shah. With me, as always, is Shrishti Sharma. And well, Shrishti, what a day of trade we're seeing because we have held on to all of those gains that we saw in the morning. In fact, we've built on slightly higher from that as well, given that the numbers we've received, even from the broader end of the market, have not been all that bad in the last few hours, if you could say. Let's take a look at what the markets are doing right now. And for the Nifty, we're at 24,641, very close to 24,650. Let's see in the next 60 minutes if we're able to surpass and then hold above that 650 mark. So you have a 0.6% uptick coming in on the Nifty 50. For sensex, it's a 0.5% uptick coming in. Similar moves. India VIX is lower by about 1%, so looking good on that front as well. Nifty Bank is up 0.3%. Let's see what the broader end of the market is up to in today's trading session. The Nifty mid cap is outperforming the benchmarks right now, a 0.7% uptick, and similar moves from the small cap space as well. So in fact, the show of support today for the overall market is coming in from the broader end. If you take a look at some stock specific action, it's largely names like Apollo Hospital now up 7%, so consistent performer today, followed by Hindalco up 5%, Hero Moto, Dr. Reddy, Cipla, Eternal, BEL, all of these are up 2% each in today's trade. On the flip side, handful of stocks that are causing some pressure on the Nifty: IndusInd Bank, Adani Ports, ITC, Titan. These are some of the stocks worth watching out for. Like we were flagging off some time ago, you have only FMCG and PSU banks that are less than 0.1% in the red, so absolutely flat and nothing to worry about here because the recovery is what we've seen on this front as well. But it's through and through the day of Nifty Pharma, Metal, Auto, Realty, Bank, IT, Energy, all of these sectors are doing very well. Shrishti, all in all, it looks like a very good day of trade, and some select stocks are also doing very well today. Case in point, Paytm.
Oh, well, indeed, there's been no stopping for Paytm after that stock really passed that 1,000 odd mark. And Snehi, a lot of the sectors or stocks rather from your sectors, be it FSN, other than that, a while back it was Devyani International as well that did come out with its earnings, and it seems like a good set indeed. Apollo Hospitals, one of the other stocks holding strong since the start of the day. Add to that list is Hindalco, BSC, the metal pack overall is seen to be shining bright. So the flavor of the market still remains a lot of sector churning at play right now. But as we are at the flag end of the earnings, it's good to note that select counters between the metal pack, hospital chains, they have actually done very well for themselves. But what do you make of the markets and what your strategy be like? Let's try to decode all of that with a whole host of experts joining us on the show right now. Firstly, let me welcome Narendra Solanki on the show right now. He's joining us from Anand Rathi Shares and Stock Brokers. Hi Narendra, good afternoon and good to be speaking with you. And firstly, your take on the stellar run within the metal pack, because after a while, Narendra, we are seeing that bit of an excitement. Yes, fueled by Hindalco, but the other stocks are not left behind. What is that you're making of the metal pack? Is it the likely meeting between the two big nations, US and Russia? Is that boding sentimentally well for the metal counters, or the earnings are the sole drivers here?
Yeah, good afternoon. I think it's a mix of both. If you see overall results for the sector, the volume growth has been decent. And of course, the meeting of US President and Russian President over the weekend is definitely sentimentally positive for the global markets, as we might see some kind of a resolution around a long stretch to Ukraine-Russia war, which might definitely provide some kind of a tailwinds to the global growth, which has been lumping around since the war started, and the critical raw material supplies, which has been the disruptions which we have been seeing in a lot of different sectors regarding key raw materials. So I think all of these three factors have been really boding well. Plus, the government of India's support to the sector has also been tremendous over the past few quarters, which has been also one of the key factors supporting the sector. And going ahead, we continue to see the domestic improvement in the volume growth happening for the country as the infrastructure spends keeps up the pace. So overall, it's a net positive for the sector right now.
Net positive dip coming in, and that's reflected in Hindalco too, right? The kind of numbers that Hindalco posted yesterday, the brokerages are very upbeat on this stock, and that positivity continues even after 24 hours of that stock coming out with its earnings. So looking good for the entire metal pack. But also help us understand, okay, before we try and talk about some more sectors, let's just go across to my colleague Ashesha, who's here with an understanding of why Hindalco is up. Of course, earnings were good, but we also have some commentary coming in from brokerage houses, and Ashesha is here to give us a roundup of all of that. Ashesha.
Well, yes, Hindalco's standalone business reported very strong set of numbers. It was better than what the street was working with, and management also came out with its commentary where they expect that the resilience in the Indian economy is likely to aid standalone performance for Hindalco going forward as well. We have Motilal Oswal. They've reiterated their buy stance on the stock with a target price of 790. They say Novelis' outlook for earnings is expected to remain soft in the second quarter as well, but earnings could rebound in the second half of this financial year. They've also said that strong domestic earnings will perhaps manage the impact of soft earnings we could see that could come in from Novelis for the rest of this calendar year. We have JP Morgan. They've maintained their overweight stance. Target price has been lowered marginally to 715 from 720 earlier. Citi maintains a buy. Target price hiked to 820 from 800 earlier. Macquarie, meanwhile, has also maintained its outperform stance in the stock, and target price has been maintained at 809 per share. Now remember, we also spoke to the management of the company, and they insisted and they reiterated the fact that second quarter will be as stable as the first quarter, especially for Novelis, but the outlook going forward is likely to be very positive for the second half of the year. Let's in fact go across and listen in to what the management had to say.
We think that, the measures that we have put in place where scrap spreads are improving, a cost optimization program is gathering steam, as well as end market demands are pretty strong. So the guidance that we're giving is that Q2 will be more or less equal to Q1, but the second half of this year, you will see meaningful improvement in the Novelis margins and performance. We remain committed towards that $600 per ton EBITDA, and that will largely start to come in once our Bay Minette project gets commissioned, which is starting in Q3, Q4 of next year. But in the short term, you're going to see Q1 and Q2 at similar levels, but the second half of this year, you will start to see meaningful improvement in the margins in Novelis.
Okay, that's the word coming in from the management of Hindalco. We interacted with them earlier in the day, and Ashesha just gave us a roundup of the bullish sentiment coming in from brokerage houses on Hindalco. That stock doing very well, up 5.2%. But Narendra, let's shift focus and talk about the pharma space, because good moves is what we've seen here. 1.8% higher in today's trade is the Nifty Pharma, and it's actually names like Alchem. Yesterday, strong numbers is what this company reported. You have Zydus Life, Laurus, Dr. Reddy's. In fact, it's not only diagnostics, it's your pure play pharma also that is doing very well in today's trade. Within this entire sector, what are some sub-themes you're liking at the moment?
See, in pharma right now, our main preference is towards hospital segments. So we are more positive and inclined towards hospital segments in comparison with the drug makers. Of course, because of the uncertainty around Trump tariffs and a lot of pricing pressures expected to come up in the developed market as well. Especially a few weeks back, if you see, the Trump has again reiterated that there are a lot of the prices of the medicine are too high and needs to come lower, so that again can trim the margins for the company. So right now our preference is to our hospital segments, which are definitely posting good results, and a lot of capacity expansion has happened, and most of those capacities are starting to come online. And in next few quarters, we are going to see a lot of capacities around the hospital segments coming online, which would further aid in improving the revenue growth for the hospital segment. So we like hospitals more.
Right, so that's the take coming in on the hospital pack right now. But with this fierce time now to slip into a very short break. But before we do that, let's also hear out from the management of Apollo Hospitals as they remain optimistic about the future growth prospects, wherein MD Sunita Reddy says that they are aiming for a 25% hospital EBITDA margin going forward. Listen in.
Going forward this year, we'll open out 2 facilities. We'll have Pune ready. We've also acquired a hospital in Bangalore, 150 beds, which will go live next quarter. So we're looking at adding about 400 beds this year. Further on in the next year, we'll add another 800 beds. So in terms of profitability and margins, currently we're at an EBITDA margin of 24.3. We think that we'll move towards 25%, and the losses coming in the current year will be very limited because we're opening 2 facilities. We will be on target for 100 crores of GMV for insurance, where there's a 20% conversion into revenue.
Welcome back to Closing Trades right here on ET Now. So the markets continue to hold steady. As of now, we are holding on to that gain of Nifty 50, while Nifty Bank as well is now seeing almost a 200-point of gain for itself. But let's connect with our experts on the show then, and let me also welcome Nagraj Shetty as well as Aditya Arora on the show right now. And very good afternoon, gentlemen, and thank you so much for your time. Nagraj, firstly, your take on the stellar move on benchmark indices. Yes, it's a good gain, but the key question remains whether or not we will be able to sustain this.
Hi, good afternoon, Srishti. Yeah, the way it has Nifty has moved up the 300 level is looks like market is sustaining the higher levels. There is a hurdle, immediate hurdle around 24,700 levels. I'm expecting this hurdle is going to be taken out on the upper side, and we could eventually add towards the 25,000 level, which is the next set of resistance for the market in the near term.
All right, that's the take coming in on the markets right now. But yes, along with that, select counters, they have been doing very well. And Aditya, let me come to you for your take on the pharma space, because after a while, we are seeing that sector doing very well, though the street is really looking forward to that kind of a tariff announcement, if at all, when Donald Trump did give almost a week deadline. But yes, the markets are taking a bit easy, at least for today. Cipla, Dr. Reddy's, these are your top movers. What's your take on that? Well, firstly, good afternoon.
Very good afternoon to you and to everyone and all our viewers. Yes, absolutely. Nifty Pharma is taking it easy, and that's quite a swift move on the Nifty Pharma. From the lows of last 3 days, we have seen almost 3 days of gain on Nifty Pharma index from 21,300 to 22,000. I think it's almost a V-shaped recovery over there, and a little more to go because the sentiments are pretty good internationally also. Pharma related sectors are doing well, and even in India, a lot of heavyweights in Nifty Pharma are doing well, and we have tested the important technical levels of 21,300, and we have respected that support. This is the second time when we have bounced from that level. So I think until and unless 21,300 to 21,450, this range is protected, which is the demand zone for the index. I think we could head a little more higher towards levels like 22,500 to 23,000. So I think the outlook is neutral to bullish on Nifty Pharma Index.
All right, so the outlook stays bullish on the pharma index, and yes, the large caps have started participating in the rally as well. But along with that, one particular segment that is doing very well is actually the new age consumer players like Honasa, Nykaa. They are soaring in trade today, post their Q1 earnings. And my colleague Snehi joins in to help us understand what worked for them and what the brokerages are penciling in now. Snehi, over to you.
Well, absolutely. Two stocks that are up in a way, Nykaa as well as Honasa Consumers on the back of its Q1 earnings. Both of them very good set of numbers coming in. Let's take it one by one. Understand first what worked for both of them individually. Nykaa, revenue, EBITDA and margin in line with our estimate. The overall GMV came in at 4,182 crores, which is up 26% year on year, in line with our estimates. What really pushed the stock to do well this time around in Q1 was the BPC revenue. That was up 24%. We were expecting an 18% 20% growth, so beat on that front. Fashion GMV also up 24.5%. We were expecting a 20% growth, so big beat on that front as well. While we're talking about the fashion segment, the fashion net losses have reduced on a year-on-year basis to 27 crores from 30.3 crores last year. So these were all the factors, the top factors among other positives that worked for Nykaa this time around. Let's shift tail and talk about Honasa consumer revenue in line. PAT EBITDA margin beat versus our estimates. EBITDA margin expansion has been healthy. Focus categories like face wash, shampoo, serums, they've seen double-digit year-on-year growth. There's been 100% year-on-year growth in face cleansers, and this is the third category to reach an ARR of 100 crore plus. The revamp in the general trade strategy, remember that they did last year, has reaped into results. Modern trade and offline retail distribution are both up 20%. Direct distribution strategy is up 50% year-on-year, and that has driven a 50% increase in retail outlets built in Q1. Now let's come to the guidance front. For Nykaa, they are on track for their fashion EBITDA margin break-even in FY26 this financial year itself. They also say that beauty vertical has room for more profitability, and they see opportunity in health and wellness supplements, and hence the acquisition of Nudge Wellness. For Honasa, they expect double-digit value growth for the remainder of FY26, EBITDA to be maintained between 7 and 8%, and they expect larger brands to reach the mid-teen EBITDA margin by 4 to 5 years. Lastly, what the brokerages are making on both of these stocks. For Nykaa, Jefferies maintains a buy, Citi maintains a sell, Axis Capital and Nuvama have all maintained buy, but barring Nuvama, all of these other brokerages have hiked the target prices as well. As is the case for CLSA, wherein for Honasa, wherein CLSA in fact has upgraded the stock to an accumulate from hold, hike the target price. Jefferies continues to be positive, Goldman Sachs has maintained neutral, JP Morgan has maintained underweight, but even both of these brokerages have hiked the target prices nominally. So that's the take on the Q1 of both Nykaa as well as Honasa, and what has gone right for both of them this time around.
We would rather play companies where sustainably on a longer term basis, apart from the cyclical second half seasonal uptick, you will see continued sustainable growth in the years ahead. And that usually is these consumer tech companies like some of the ones you mentioned, where they're gaining market share, they're pulling further away from some of the weaker competitors in this slow economic environment. So again, what we are saying is look for category leaders, even within the consumer sector. Look at these consumer tech companies, which are category leaders. Some of the names you mentioned, Nykaa, Honasa, etc. They are pulling further away from some of the weaker competitors. But again, the next 1 or 2 quarters are still going to be somewhat tough. Valuations are elevated. So don't expect any dramatic returns from their stocks in the near term. But on a 3 to 5 year basis, if you're willing to wait that long, these are the stocks we would like.
All right, so that's the take coming in from Prateek Gupta, that you have to be really selective within this particular pack as well. But Narendra, a lot of excitement on the stock prices as well. But what do you make out of it? And any of the stocks that is still looking good to you, where one can really look for a fresh addition at these levels?
Yeah, first of all, both those stocks are not under half coverage, but yeah, definitely the results and the guidance has really given thumbs up. The market has really given thumbs up for the stocks. And since the consumer space was not performing well throughout the year, and with just the festive season is starting around the corner, so I think this is much needed respite in terms of the consumption space. And if you see, gradually, the consumer space in these segments are also consolidating, although on a very slow pace. But we are seeing consolidation into the large players, and the unorganized segment is getting out of the competition, and gradually these kind of players would definitely be benefit for the medium to long term. So definitely, it's a place to be in for the long haul.
Narendra, before we let you go, would appreciate your view on some of these defense counters that are doing exceedingly well in today's trading session. Case in point, Bharat Dynamics is up 7%. You have Garden Reach that's up 5%. A couple of other defense names are in focus as well. Give us your sense on where you think these defense valuations are, and do they seem attractive, or are they still quite high compared to some valuation levels that we've seen, let's say about 6 months or so ago?
See, as far as defense space is concerned, we are positive on the space. and not only for the short to medium term, but even for the long term. If you see the overall demand dynamics in this space, the demand is huge, and the India's import dependency is also very huge. So all these domestic manufacturing companies which are coming up with new technologies and inculcating new manufacturing techniques and offering products to our armed forces, and the increased acceptance by the armed forces on the domestic manufactured goods is steadily rising. So definitely the defense space is going to grow significantly. Now coming to the valuations part, definitely valuations were higher. But if you see the overall growth runway of these stocks, so the growth is continue to remain very high for at least 2 to 3 years, because the requirement defense procurement and the defense requirements are very huge for our armed forces, and all the three armed forces combined requirement is very huge. So ordering activity will continue to pick up over the next few years. So whenever you get a chance to buy in terms of a passive market pessimism, or whenever there is a decline, so it's a good space to be in, and or to buy into the installments or something like that. But yeah, definitely for long term, the defense space is very good.
The defense space is very good for the long term. That's the word coming in. Mr. Solanki, thank you so much for taking your time out and joining us here on ET Now this afternoon and helping us with a whole host of fundamental ideas going forward. But let's shift focus then. And Nagraj, coming to you, your stock-specific ideas for trade today?
Yes, I have two stock-specific ideas for the long side. One is Scrappy Point Laboratories. Chartically, currently trading around 2149, 2150 level. Chartically, if you look at this stock was in a downtrend over the last few months. Recently, we have seen some sustainable surge from the lower levels, found a higher important bottom levels, and currently placed at the edge of a decisive breakout of the trend line resistance. The overall chart pattern is looking positive. One may look to buy at this point of time around 2150 levels, and the upside target would be around 2300 levels, and one can place a stop loss at 2080. And second one is Policy Bazaar, PB Fintech. Policy Bazaar has been in a consolidation phase. Recently, we have seen some upside breakout of the important resistance, currently showing high volatility at the higher levels, placed at 1850 levels. One can look to buy at this point of time. The upside target would be around 1950. One can place a stop loss at 1800.
Okay, so those are some of the stocks that Nagraj is liking. Aditya, what about you? Where are you placing your BTSC trades for the day?
I think auto sector is doing pretty well, and we have seen continuous outperformance in auto sector despite the volatility. So I picked up a name from auto sector itself, and the name is Minda Corp. We have seen 3 days of advance in this counter, and I think if one makes a view for about 1 to 2 weeks, then I think the rally could continue. So Minda Corp is a buy at 490, and the stop loss over here is 460. Target should be 525. This is the first one. And the second one is Zydus Life from the pharma pack. We have seen good gains in pharma sector. I think the rally could continue in this space as well. In last few days, Zydus Life has seen good amount of volumes, which is more than many days of average. So I think there's a lot of thrust and momentum in this counter. This is a buy at current market price of 991.40. Stop loss is 950, and the target is 1030 to 1050.
Minda Corp and Zydus Life Sciences, two trading ideas coming in over here. But let's shift focus then. And sources are telling ET now that Indranil Bhattacharya, who recently got appointed as the ED of MPC, is likely to replace Rajiv Ranjan in the committee. Anurag Joshi is now joining us with more details on this. Anurag, take it away.
Indranil Bhattacharya is likely to replace Rajiv Ranjan in the Monetary Policy Committee. Bhattacharya recently was appointed as the Executive Director of the RBI's Monetary Policy Department. Rajiv Ranjan has shifted to lead the Department of Economic and Policy Research, and the RBI board is expected to approve Bhattacharya's appointment to the MPC in its upcoming meeting. The current MPC members include Governor Sanjay Malhotra and the Deputy Governor Poonam Gupta. The external members are Nagesh Kumar, Shogata Bhattacharya and Ram Singh. The Monetary Policy Committee was first set up in 2016, and it is the authority that decides on the benchmark interest rates, including the repo rate for the RBI, and it follows the mandate of the inflation target, which is currently at 4%, with a tolerance band of 2% on either side. So it is 6% on the upper level and 2% on the lower level.
Anurag, thanks for all of those details. So that's the exclusive word coming in from ET Now, and of course we'll be keeping you updated as and when we have something new on this front. But we're also getting word from exclusive sources that External Affairs Minister Dr. S. Jaishankar, he's going to have an upcoming Russia visit. He's likely to travel to Russia from the 18th to 21st of this month. That's August. The possible meetings could include interactions with Russian officials, Deputy Prime Minister Russia Denis Manturov as well. So these are going to be some very important talks to watch out for. Jaishankar is also expected to address business from August 20. So that is also something that we are going to be watching out for. And remember, NSA Ajit Doval met Russian President Vladimir Putin on the 7th of August at the Kremlin in Moscow. So looks like Dr. S. Jaishankar has his work cut out for him, given that this Friday we are going to have the meeting between Putin and Trump that's going to be happening in Anchorage in Alaska. So that is also going to be a very important development to watch out for, what the outcome is from that meeting. And now it's slightly more reassuring that we also have someone from our end going and meeting their Russian counterpart in order to try and ease some of these sanctions that we've seen. And also we'll have more clarity on India's oil trading strategy that right now we do with Russia at a much discounted rate. So that is something to watch out for. Let's understand a little bit more about what to read upon this in terms of what the market could react, or how the market could react rather, when it comes to this news flow. We have Mr. Siddharth Khemka, Head of Retail Research at Motilal Oswal, joining us at from MOSL. And thanks so much for your time today. Good afternoon, Siddharth. First up, I just want to understand that given there is so much uncertainty right now, we might get a slightly clearer picture on Friday, and then at the end of this month, when this meeting potentially takes place between Dr. S. Jaishankar and Russia. Give us a sense of how should an investor navigate the kind of volatility that we're seeing at present?
Yeah, hi, good afternoon. Glad to be on the show. I think if you look at, there are two different pictures that are emerging on the from the market perspective. A is the earnings picture, which is almost at the last few days that are left for the Q1 earnings season, and more or less we have seen a good set of numbers, in line numbers. So we have got about 8 to 9% earnings growth compared to a 6-7% earnings growth expectation. So broadly, I think there is no negative coming out from there. If at all, some of the sectors and domestic focus segments have given out a strong outlook going forward, so that should be positive. And the second picture is on the global front, where the geopolitical things are steaming up, are hotting up. Initially from a friendly and almost on the verge of signing the trade agreement with US, we now have a situation where things have become worsened. We are among the highest tax slabbed in terms of 50%. But again, there are, as we have heard, that there are several meetings that are lined up between the US president and the Russian president. India, on its parts, has also steered up a lot of meetings globally. So a lot of development news flows will come from the global front. What we expect is that things could only improve from here on. Difficult to say whether things will go bad from here, but there is hope that there will be some negotiation between US and Russia that could lead to removal of the secondary level tariffs that has been imposed specifically only on India compared to all the other importers. So I think things will become clearer once these meetings happen. But nonetheless, as you asked, what should investors do? I think in this volatile time, it is better to stick to some of the domestic names. There are several sectors, segments that we like. You have seen interest rates coming down sharply from the start of the year. RBI, through its various measures, including the repo rate cut, the CRR cut, and the other lot of other provisionings that they have relaxed, have led to almost more than 8 lakh crore of liquidity injected into the system. And we expect that to start showing up in the entire corporate earnings demand push up by the second half of the financial year. So Q3, Q4 should see a big impact of that. So financials, consumption, domestic consumption theme should do well. Monsoon has been good. Inflation is at 8-year low. Again, that is very conducive. So far, some of these domestic financials, consumption-driven companies, FMCG, I think next 2 quarters could do well. We have seen that after FY25, where the government capex had been lackluster, FY26 has started on a strong note. So government capex has been front loaded in FY26, and that has led to strong demand for infra companies, for cement companies. So that is again a kind of a domestic theme, but coming out with strong execution and better numbers.
Mr. Khemka, since you spoke about a whole host of sectors that you're bullish on, any sector that you're completely staying away from at this juncture, especially after the kind of numbers that they have reported?
I think one sector which we are a little bit averse to right now is the IT sector, and purely from a near-term perspective, because things are very uncertain, and the numbers and the downgrade in terms of earnings outlook for FY26 doesn't leave any triggers for IT companies. So hence, I would suggest people looking for next 2-3 quarters can avoid IT. We will get enough time in the coming quarters if for long-term investors to accumulate them.
So that's the take on some of those IT counters. But let's talk about select individual stocks that are doing very well in today's trade. Aditya, give us a chart check on Godrej Industries. Strong set of numbers coming in. They've announced some corporate action as well. That stock is up by almost 8%. Let's pull the slightly longer term charts for Godrej Industries. Let's say a 1 month, 3 month chart, and let's see what that stock has been up to. 3 months, only 5%. And in fact, that's the kind of move it has given today in one day post its earnings. Aditya, what are you making of Godrej Industries on the charts?
Right. So Godrej industry has been pretty stable in this volatile times, and that has been the case with a lot of FMCG counters and FMCG index itself. When the market were underperforming or were under the pressure, it was the FMCG sector which was holding well. Now it has given a breakout of almost 5 weeks, a proper rectangular pattern breakout accompanied by very good volumes. So this could suggest that strong hands are accumulating this counter, and this is a breakout day for Godrej industry. So over here, we can expect outperformance of Godrej industry to start. And a few months back, we had seen a massive jump in volumes of Godrej industry. So, and it has protected those important support levels. So I think now continuation of that rally has started, and we can soon reach higher levels. One could maintain stop loss at 1060 odd levels, and targets for this pattern should be 1270 to 1450.
Okay, so that's the view coming in on Godrej Industries. And since we are talking about the FMCG sector, although the market has done fairly well this week so far, select pockets within this FMCG sector have not done that well. We have Colgate, which is down 1.5% for the week so far. We have Dabur and Britannia also showing some bit of subnewness over here. So, Nagraj, your view on select FMCG stocks which have not done well, do you expect a rebound in these stocks?
Yeah, selective FMCG like Dabur, what you said is certainly not showing any good sign from the higher levels. We have seen some declines. Currently placed around 495, 500 support. The way it has declined from the higher levels looks like more weakness could be there in the short term.
Okay, so that's the take on FMCG, but also help us understand your take, Siddharth, on this FMCG space. I'm not talking about staples. In fact, not FMCG. I would say the overall consumption space. And let's talk about some high-end consumption here, like consumer durables, for example, the likes of Voltas, Blue Star. Recently, we've seen how PG Electroplast got battered in trade off the back of a weak Q1 coming in. By when do you believe this shortened summer impact that we've seen on some of these white goods, by when could that be behind us? Because you also have the festive and wedding season up ahead. Monsoons have been good this time, but you also have some good tailwinds like the festive season ahead. So what's your take on some of these white goods and where they could be headed?
I think definitely there was a lot of expectation out of the strong summer that started, and a lot of inventory was built up right across, specifically the AC segment. And if you look at the disappointment, has largely been in the AC companies, right from Voltas, Amber, PG Electroplast. Most of them are serving the AC segment, and what we heard from the management outlook across was that definitely they are hopeful of demand recovery in the festive season, in the marriage season, till the time inventory cleanup is happening. I think near term, next at least Q2 will be another weak quarter where margins could be remaining under pressure, volume growth could be weak. But having said that, again, the December quarter, Jan quarter, we could see pickup in demand because of the festive season, because of the marriage season happening. So I think, again, from a long-term perspective, we believe that AC penetration in India, given the global warming and the weather changes, the demand will remain strong. There is a huge penetration that is still left in India with the electrification happening across the country, availability of power, demand for air conditioner is only likely to go up. Having said that, again, as I said, in the next 1 to 2 quarters, things could remain weak, and only by the end of Q3 we will get to understand how things are and whether situations are improving. So long term, we believe the sector should do well, but from the next 1 to 2 quarters, I think things would remain a bit subdued.
Okay, but the long-term outlook continues to remain very positive. That's the word coming in on several of these white good companies, Blue Star in particular. But after posting weak quarter of earnings on the back of weak summer and early monsoon, we also spoke to the MD of Blue Star on the future guidance. Let's go across and listen into what he had to say.
Between now and 2030, the room AC market should grow at a CAGR of 19%. And it is not much, strictly speaking, a household penetration of 8 to 9%. Therefore, it should happen. It has happened in other categories as well. Irrespective of the poor summer season in 2025, between now and 2030, CAGR of 19% will happen. There may be a year in which the growth will be 30%, another year it may be only 8% or flat. We are not worried about that. Now, we have gone by a very summer impacted year in the past. Eventually, festival season does well, and it results in making up partially for the degrowth in the summer season. There is an energy label change that is coming on 1st January 2026. So therefore, what will happen is there will be people who will end up buying the current label machines, and then when the table changes, there is another set of people who want to wait and buy the new. Both are there in India. They would like to buy the current 5-star. There are people who would like to buy the new 5-star. So keeping all this in mind, the original estimate of 25 to 30% growth will not happen. In my view, it will be between 10 to 15%.
Word coming in from the management of Blue Star, Mr. B. Thiagarajan, who we interacted with earlier in the day, and he's flagging of caution in terms of what we can expect when it comes to the growth of the company and the overall production going ahead. But he's also optimistic of on the festive demand and hopes to see some recovery in the sales and the demand going ahead. Aditya, give us a quick chart check on some of these white good counters. It could be Voltas versus Blue Star. Well, fundamentally, they are weak right now. But on the charts, if you had to deploy fresh capital, would it be in Blue Star? Would it be Voltas? Where are you seeing better looking charts right now?
Sure. So we have seen fair amount of volatility in both these counters, but Blue Star looks better. I think it's consolidating and digesting the volatility which we have seen in last few days. We'll follow level-based approach over here. Currently, the stock trades at 1755. We could see a breakout above 1740. In that case, the stop loss should be 1750, and target over there would be 1950 to 2100.
So that's the word coming in on Voltas, but let's shift focus then. And authorities are now amping up their probe into irregularities at IndusInd Bank. Former Deputy CEO is under the lens of Economic Offences Wing. Anurag Shah, my colleague, is now joining us with more details on this. Anurag, over to you.
Former Deputy CEO of IndusInd Bank, Arun Khurana, is under the scanner or under the probe of Economic Offence Wing EOW, and he can be summoned for questioning by EOW Mumbai as per our sources. Remember that Arun Khurana resigned from IndusInd Bank on 28th of April after the internal probe found about the misaccounting and the lapses in the derivative accounting which impacted the PNL of IndusInd Bank by 1900 crore. There were other charges also against the senior executives about the trading in IndusInd Bank before the information was made public. So in this regard only, as our sources are telling that EOW, the Economic Offence Wing, the Mumbai EOW may ask Arun Khurana to come for questioning, and Arun Khurana is under the scanner of EOW.
So that sounds slightly detrimental for IndusInd Bank right now, although this is regarding an ex-employee, and those are some ET Now exclusives that sources have exclusively told my colleague Anurag. But while we're on the topic of banks, Saurabh Mukherjee of Marcellus Investment Managers says he prefers private banks over the public sector banks, and he believes that banks will have the best of the Indian retail story. Let's go across and understand to his rationale and his top picks from within the large cap financial space.
If you want a place to play the highest end of the most highest quality end of Indian consumption, then I would say look at the two best private sector banks. They seem to be HDFC Bank and ICICI Bank. We have both in various portfolios. Their asset quality is holding up. Their liability piece is stronger than ever before. And I suspect again that once again the public sector banks are going to fall behind. But it's interesting this time, barring HDFC and ICICI, the rest of the private sector banks also look to be struggling on both sides of the balance sheet. This is very interesting. Both sides of the balance sheet, we're seeing the private sector banks having a challenge. So the best of Indian consumption, in a way, the best of Indian retail, I think has been locked in by these two premier private sector banks.
Okay, so that's the word coming in. But let's, since we were talking about IndusInd Bank, Aditya, let's take a chart check. The stock is down 1.5%. In fact, it is the biggest loser on the Nifty 50 index today. What will your view be technically as far as IndusInd Bank is concerned?
If you analyze this stock technically, then I think the stock has taken multiple times support at these levels of 750 to 770 odd levels. So currently the stock has respected the support of 765 today. So until and unless we are above 750, 760, I think there's a scope for a rebound in this counter. And we can see a proper breakout once we break above 790 odd levels. Once that is done, I think probably this stock is headed towards higher levels like 820 to 850.
Okay, so that's the take on IndusInd Bank on the charts and the next key levels to watch out for. So that way in here and give us your sense of what you're making of the entire financial pack. It would be large private sector banks, PSUs, MFIs, NBFCs. What are you liking in terms of a theme when it comes to financials? Because we've not seen a lot of surprise on the earnings front when it comes to at least the large private sector banks, barring ICICI Bank. Everything else has been pretty okay. So where are you seeing value in the entire financial space right now?
Definitely, I think the sector has been a mixed bag, as you rightly highlighted. ICICI Bank delivered all-round robust performance, and by far was the exception compared to a lot of other banks. We saw disappointment from Kotak, Axis, IndusInd, which was expected. But if you look at HDFC Bank, has also been showing improvement, sharp improvement in its deposits growth in its core business. So What we believe is that the synergy benefits have now started playing out in HDFC. The CD ratios are coming down. There is a lot of focus on improving the deposits while steadily also looking at growing the loan book. So and we also had the numbers from SBI. So I think pretty strong all-round performance from SBI as well. Obviously in line with expectation, but nonetheless, in this environment, we believe within the banks, our preference would be towards ICICI Bank, HDFC Bank, and SBI. Within the NBFCs, what we see is that the consumer credit companies are still reeling under pressure, and the benefit of the lower cost that is started to playing out. So NIM improvement is clearly visible in NBFCs compared to banks where NIMs are yet to recover. And between them, I think some of the NBFCs that we like in the large cap space, I think Bajaj Finance is something that we like. Incrementally, we are looking at L&T Finance, which has reported an all-round strong performance. And again, within the, I would say that if you look at MFI space continues to reel under pressure. That is one space that we would avoid. Within the broader financials, one space segment that has done very well is the insurance companies, right from LIC, HDFC Life, SBI Life. I think all across we have seen good growth in premium collection margins. The VNB margins have improved. Most of the companies have taken to change in the product mix. So some of the traditional products plus the lower dependency on ULIPs, that has led to improvement in margins, and we believe that is one space that could consistently do well. So insurance within the broader financials is something that we like. HDFC Life and SBI Life are our preferred picks there.
Okay, so positive view coming in on the insurance sector within the BFSI space. But since we are on the topic of bans, Aditya, wanted your thoughts on PSU banking sector. It is in fact the biggest sectoral loser in trade today. The likes of Maharashtra Bank, UCO Bank are all falling anywhere between 1 to 1.5%. Your thoughts on these stocks?
I think today PSU Bank is falling, and a lot of sector rotation is happening from PSU banking to private sector banks. That is evident on the charts. But I think it was the public sector bank which started the rally first, led by a lot of these small banks, and then 2 days back we saw SBI showing stellar performance. So I think this is routine profit booking in PSU banking space. Rally should again start in PSU banking space, and I think SBI is one of the best candidates in the pack.
That's the take on some of the PSU banks. But Aditya, last couple of minutes left until we wind down for the day. Give us a sense of where do you think the Nifty could open tomorrow, given Friday is a holiday and tomorrow's expiry? Do you believe tomorrow could be slightly more volatile than what we've seen today? Or do you believe the levels and the growth that we've seen today, the positivity could sustain heading into tomorrow too?
This is pretty tricky one, given that we have a lot of news coming in and a lot of market is reacting to a lot of tweets these days. But if we follow level-based approach, then I think if we breach 24,700 tomorrow, then that is technically a breakout for the market. And then we are headed towards levels like 27,800 to 25,000. So one must note down the breakout level, which is 24,700 for tomorrow.
All right, so that's the view coming in and several levels that you need to keep an eye out on. But Aditya and Mr. Khemka, thank you so much for taking your time out and joining us here today this afternoon. But let's wrap up today's trading session then. Nifty is ending with an uptick of nearly 139 odd points as we speak, near that 24,623 mark. Nifty Bank though was underperforming in trade, 145 points higher, 55,191 is where Nifty Bank is ending for the day. In terms of individual stocks, we have Apollo Hospitals. After it reported very strong set of numbers, the stock is up 8%. The biggest gainer on the Nifty 50 index. Hindalco, again earnings reaction over here, up 5%. Cipla, Dr. Reddy's, Hero Motocorp, Eternal. All of these stocks ending with gains of nearly 2.5 to 3.5% in trade today. On the losing side, IndusInd Bank, on the back of a negative news flow that came in, that stock is ending 1.5% lower. Adani Ports, Titan, ITC, Tech Mahindra, Ultratech Cement, these are some of the other laggards from the Nifty 50 pack. In terms of individual sectors, we have pharma stocks which were bucking the trend. Nifty Pharma Index, in fact, is ending with an uptick of nearly 2%. Alchem Laboratories, that one is up 4.5%. Laurus Labs, Zydus Life Sciences, Cipla, Dr. Reddy's, all of them ending with gains in excess of 2.5%. Metal stocks were also shining bright. Hindalco, of course, was leading the pack. But apart from Hindalco, we had NMDC up 2.5%. NMDC also, in fact, is an earnings candidate. It reported its numbers yesterday. Nalco up 1.5%. SAIL, Hindustan Zinc, Hindustan Copper. These stocks were also gaining in trade. On the losing side, though, we had PSU banking stocks which were under quite a bit of pressure, the biggest sectoral loser as well. Maharashtra Bank down over 1%. UCO Bank, Central Bank, Canara Bank, Bank of Baroda, all of these stocks are also ending with losses today. Select FMCG counters were also under pressure, the likes of Colgate down 1.5%. We have Radico Khaitan down 2.5%, and Varun Beverages is also ending with a downtick. But all in all, Nifty is ending with marginal amount of gains. 24,632 is where it is ending for the day. And broader markets were also ending with some amount of gains. But that's all the time we have on this edition of Closing Trades. Don't go anywhere. More news and updates will continue on the other side.